So welcome back to the Millionaire Incorporated Forex Basics trading course, where we're going to go into module 2 on charting. We're going to go through part 1 on charting basics and candles. So what we're going to cover in this part of the course will be chart basics and candles and candlestick analysis. So charting is where and how we do our analysis for Forex. So this is where we can look at fluctuations of price over time and make decisions about which direction the price of a currency pair may move over time and by how much. Because we don't just want to be placing trades blindly, hoping that it may go in the direction we think, just because we have a hunch of the potential direction. This is pure gambling, and it's where and how you're going to lose money over time, guaranteed. So we want to avoid doing this. So we want to make decisions about what the price of a pair is currently doing and place trades assuming what it will do moving forward to give us a higher probability that we'll be right and make profit on the trades we take over the long period of time. So we want to be consistent. So we have to have a strategy on how we go about looking at the price of a currency pair to make predictions over time. So taking it back to high school with charting, what you're pretty much measuring is the change of one variable against a constant over time and putting it on a graph or a chart. So in the world of Forex, on the x-axis you have time, which is a constant, and y-axis, which is the price, which is our variable. So there are a lot more elements which make up a chart that you can change, and you can change them to however you feel like. But I'm going to go over some of the more basics of charting and in this section so you can get a more reasonable understanding of what it looks like and how to do it. So before we go over charts, we need to know where to look at our charts to see where we can analyze our currency pairs. So there are a couple of places where you can actually do this, and that is on the trading platform provided by your broker, and it's usually a MetaTrader 4 trading platform. And this can either be on your laptop or computer, or you can even download the MT4 trading app for your phone as well. Now, I tend to do all my charting on a free website called TradingView, and you can find that at tradingview.com. I left the website there for you as well. And here you can view all the pairs that you want. You can also look at stocks, commodities, futures, pretty much anything. It's literally all there. And best of all, the basic version of this trading tool is free. So spend some time playing with the platform to get to know how it is and what it looks like and what you can do. So we'll jump over to it now to have a look quickly at some of the more basic functions. So you can see here, this is our chart on tradingview.com. And along the sides, I'll start at the top here, you have the pair name, so your Aussie CAD here. You can change the time frame here from seconds, minutes, hours, whatever. You can choose which kind of chart you want for candles or bars or lines or areas or baselines, all kinds of things. Like I said, I'll go over this in a moment. You can also look at compare or add a symbol, indicators and strategies. I tend to not use many of these tools here. Now down the side here as well, I'll go over just the more common basic ones. So you got the trend line tools. So you have the trend line, you can write info about that, horizontal lines, horizontal rays, vertical lines, you can draw arrows, horizontal rays, extensions and things like that. From there you can also come down to here where you have the Fibonacci retracement tool and extension tool, which is probably the most common one you'll actually use. From here you have other charting tools as where you can draw shapes like in brushes, rectangles, rotated rectangles, ellipses or ellipses, curves and things. You can also write text. You have some other tools where you can actually do patterns, head and shoulder patterns and things like that. I tend not to use those. You can also draw in trading positions or trading plans like long positions or short positions or forecasts and things like that. You can also pop in like little arrow markers and things, like little notations, icons. The measuring tool, you can zoom in, zoom out, and a few other bits and pieces here. So spend some time on this platform and actually learn what it can actually all do. And that will actually give you better understanding. So we'll go back to our course notes now. So let's start with a very basic kind of chart, and that is plotting the change in price over time as a line. Now, some traders use this kind of chart to determine their levels of price action. With this very simple kind of chart, we are plotting the closing price of a currency pair over time. So if we are looking at it on a daily time, what you'll be charting is the closing price of that pair for that day, and then connecting the dots over time. So let's go back over to TradingView to look at what it looks like on the chart so you can get a better understanding. So this is the line chart of the Aussie CAD on a daily time frame. So as you can see, it's basically connecting the dots over time. Now each kind of movement is marked as a day. If you need to look at you actually have the days down the bottom here as well, so you can actually see where it's going. So you can actually see how the price is moving over time. So it's not always just a straight line in movement, it's actually up, down, different kinds of motions. This is something we'll go over in just a moment. Now, if you've seen some posts before about Forex in the past, you'll have noticed that the majority of cases, line charts are not what is charted commonly. You'll see a lot of the time these red and green bars moving up and down, and we call these candles on a chart, with lines above and below the coloured part. Now, the coloured part of this is called a body, and the lines below and above are either called shadows or wicks. Now, these candles, or these tools for charting price, hold a lot more information than a simple line chart. So we're going to stick with the daily time frame here. So a daily time frame candle will hold information about where the price of that pair opened on the day, the highest price that it reached that day, the lowest price that it reached, and where it closed for the day. Now, with my charts, I like to use red and green candles. Red for a drop in price and green for an increase. But when you set up charts, you can actually choose whichever color you like, so you can set up however you want. So jump over here. So as you can see here, we got the green and red candles there. So the green, as we said, was a increase in price. So at the bottom of that body, we have the open. Then the top of the body, we have the close, and the highest part of that shadow or the wick is the high, and the lowest point is the low. And the opposite is true for the red candle, for the drop in price. So at the open is the highest part of the body, the close is the lowest part of that body, then the lowest part of that wick is the low, and the highest part of the wick is the high. So one thing with Forex, you can actually change the time frame at which these points or candles are recorded, and this all depends on your trading style and what you're looking for. So depending on how you want to look at it, you can look at charts on a 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, daily, or even weekly. But this generally depends on what kind of trading strategy you have for yourself, and we'll go over this in the later sections. So as I said, most traders use candles, so I'm going to spend a lot of the future presentation on analyzing candles and what to look for. Okay, so some of these candles also have names too, depending on their size and shape and how they end up. So we're going to go over a couple of them now. The first one I want to go on is the Morobuza, which is where the candle is all body with either no wick or very little wick at either end. And this can be typically looked at as a continuation candle for price to continue in the direction, or even as an engulfing candle, which I'll get into in a second. There's also a doji, which tends to be a candle with a very small body, so the price that kind of opens and closes pretty much in the exact same spot, with wicks on either end of varying size, but pretty much the same. So wick on the top, wick on the bottom is typically the same in length. From here we have a hammer candle, which is a candle which has a body closing above its open with a long wick below the body, and this usually indicates a bullish reversal, so the price to continue in a bullish pattern. Or there's also a shooting star, which is the opposite of a hammer candle, where the body closes negative with a very long wick above the body, and this is considered typically a bearish reversal. Now these last two candles are typically, or can be typically referred to as pin bars, and when these are actually coupled with support and resistance and trend lines, they are good indications of either reversal or continuation and give us a good entry position. The candle I look for mostly is an engulfing candle. And this is where the candle completely engulfs the previous candle and at the close gives a pretty good indication of the direction the price of the market is going to go. So it's typically the same thing used as a entry or a reversal candle kind of thing. So you want to try and use these candles in areas of support and resistance or trend lines and things like that to give you better odds at actually being profitable over time. And another candlestick pattern which we want to look for is what we call inside bars. And this is where we have, so let's say the price is currently moving down in a downwards fashion and comes to like an area of support, and we have a relatively large candle. Then all of a sudden, the next candle which is printed is completely within that previous candle which came down, and this typically indicates a reversal pattern as well. So same thing, you want to be looking for these in areas of support and resistance, trend lines, and fib retracements. And so when it comes to candlestick analysis, it's very important to remember that the shape and size of the candle is a reflection of the battle of the buyers and sellers in the market. And the final candle, which is printed, is a story of what happened over that time and what ended up happening. But how we use these candles is that we want to try and line them up with certain key levels of either support and resistance or in areas of trend lines and fib retracements. And this will give us more, further confirmation to enter the trade. So, for example, coming up to an area of support, as price comes down to the area, it creates a hammer candle. And then this will indicate that selling has been exhausted and that the buyers are potentially coming back into the market to push the price higher. So these are the basic candles which I look for. And I'm not going to go over many of the candles or other candlestick patterns just now. There's a whole bunch of other patterns and things like that. But there is plenty of videos on YouTube that you can actually look into this, or more advanced courses which you can actually learn more about this as well. I'm just sticking to the bare basics here because it is a bit easier to get into the habit of learning and identifying these on the chart. So let's jump over now to a chart and actually see what these look like on an actual chart. So here you can see the Australian US dollar chart on a daily time frame. And you want to try and mark your charts up on a daily time frame because it'll give you a better indication of what's actually happening. And the candles, like say engulfing candles and things like that, are stronger signals on a daily time frame. So as you can see here, we've got a resistance line here or area and a support area here down the bottom as well. So you can see as price came down, it came close to this support area and came all the way back up and created somewhat of a hammer candle to indicate the price is going to go higher. And though it did eventually kind of come back lower, but then again it created another hammer here, and then we got an engulfing candle just here to signify final price is finally going to go higher. Also got another kind of hammer here as well. You could also consider that an inside bar candle, so you can see that candle is actually completely within the previous candle, as I was saying. Then you come up to the resistance area up the top here, and you see here there's a couple shooting stars which have been printed off. So came up, touched that area of resistance, and closed lower, indicating a continued bearish momentum. You got the more boozer candle, which is just here. So you can see here, pretty much full body, very little wick above and below. And that's continuation of the price in that direction. You got a couple more over here. And you also got another inside bar candle just here. And you can actually see this is a trend line coming there as well. So I'll just quickly draw that on and show you what I mean. So from the bottom there, just connect that 2 points there. Draw it up there. And you can see the third touch confirms it. Create that inside bar at the close of that candle there. You could pretty much, well, at the break of that candle, you can pretty much enter, and you can see the price going higher.
So that's the end of this section of the course. Stick around for the next part.